All right, welcome back, everyone. Buckle up, because this week we are diving deep into market-moving news.
Yeah, a lot to you going on.
We've got earnings reports coming out left and right, some of the biggest companies, plus...
Oh, and don't forget...
Yeah, all that economic data that can really make waves.
The kind of stuff that can make or break your portfolio, really?
Exactly. We're talking about the stuff that can really move the markets, and we want to help you, the listener, understand it all.
Decode it all.
Yeah, decode it so you can make sense of it all, and maybe even,
Spot some opportunities.
Spot some opportunities, exactly. So first off, let's talk about this mountain of earnings reports.
Yeah, it's a lot.
We've got, let me see, Apple, Tesla.
Oh, and Microsoft.
Microsoft, Boeing, ExxonMobil. I mean, it's like...
Everyone's chiming in.
Yeah, it's like everyone decided to report at the same time.
Well, it's not exactly random, actually.
Oh.
Yeah. See, it's the end of the fourth quarter earnings season, so a lot of companies are wrapping up their 2024 performance, and kind of giving us a preview of what might be coming next.
So it's like what a big... Snapshot, yeah.
Yeah.
A snapshot of the whole economy. Like, we're getting a look under the hood, live.
Exactly, like we're getting a live X-ray.
Oh, I like that, an X-ray. So if we're taking this X-ray of the economy, what are we looking for? What are the vital signs we got to pay attention to?
Well, there are 3 big economic reports coming out this week, and each one's going to give us some clues about the health of the economy.
All right, lay them on me.
First up, Wednesday, the big one, the Fed decision.
Ah, the Federal Reserve, the Fed. They always keep us guessing. So will they raise interest rates again? Or will they kind of hold off?
Well, that's the big question, isn't it?
Yeah.
Remember, they've already hiked rates to a range of 4.25% to 4.50%.
Which is like the highest it's been in a while, right?
Yeah, absolutely, to try and, cool down inflation.
Right, got to fight that inflation.
But, the thing is, higher rates mean higher borrowing costs for everyone.
So that means more expensive mortgages.
More expensive car loans, everything.
Ooh, yeah, no one likes that. It's a tough spot for the Fed, right?
Oh, absolutely. It's this delicate balancing act. They need to, fight inflation, but they also don't want to completely stifle economic growth.
I see. So we'll definitely be watching the Fed decision very closely on Wednesday.
Yeah, that's a big one.
Hold on, what comes next?
Well, on Thursday, we get the gross domestic product report, the GDP.
Yeah.
This basically tells us how much the U.S. economy grew, in the last quarter of 2024.
So is the economy booming, or is it kind of sputtering?
Well, the forecast is for 2.8% growth, which actually, if you look at it, is a bit of a slowdown from what we've been seeing.
Oh, a slowdown.
And, that could be due to a bunch of things. It could be that inflation is still sticking around.
Lingering? Yeah.
Uncertainty in the global markets. Who knows?
Okay, starting to sweat a little bit about my portfolio now.
No need to panic just yet.
Okay.
It's just one piece of the puzzle, remember. Economic data, it's important, but you got to look at the whole picture.
Right. Keep calm.
Exactly.
Okay, so we've got the Fed decision, we've got the GDP report. What's the third big economic thing we got to keep an eye on?
The third one. That's the Personal Consumption Expenditures Index, the PCE.
ECE, okay.
This one comes out on Friday, and it's kind of a,
Kind of a what?
It's like the Fed's favorite way to measure inflation.
Oh, their favorite way.
Yeah, you see, the PCE, it looks at actual consumer spending.
Not just like, a bunch of random prices.
Exactly. Not just a fixed basket of goods. It actually looks at what people are spending their money on. So it shows, how people are reacting to those price changes.
Oh, interesting. So like if the price of something goes up.
Right. Like if the price of steak goes way up.
People might start buying, I don't know, chicken instead.
Exactly. And the PCE captures all of that. So the Fed sees it as a better picture of how inflation is actually affecting everyone's lives.
That makes sense. So if the PCE is showing inflation is still a problem.
Like it's still hot, yeah.
That could make the Fed nervous, right? Could make them want to raise rates again.
Oh, yeah, absolutely.
Got it. So we've got our economic backdrop. Now let's talk about the companies themselves.
Yeah, let's dive into those earnings reports.
Where do we even begin? It's a massive list.
Well, it can be overwhelming, that's for sure. But we're here to break it down for you.
All right, good, because I'm already feeling a little information overload.
Don't worry, we'll go sector by sector.
Okay, sounds good.
And we'll highlight what you should be paying attention to.
All right, let's do it.
So let's start with tech, shall we? 2 names that immediately jump out, Tesla and Microsoft.
Oh, good choices. Tesla, with Elon Musk always doing something crazy, and then Microsoft, the kind of the quiet giant of tech.
That's a good way to put it.
What should we be watching for with those two?
Well, with Tesla, The demand for electric vehicles is still sky high, right?
It seems like it, yeah.
But the question is, can they actually keep up? Can they build enough cars to meet that demand?
Then can they keep innovating, right?
Right.
Because everyone else is making electric cars now.
Exactly. And of course, there's the whole Elon Musk factor.
Oh, yeah. Who knows what he's going to say during their earnings call?
He could announce, I don't know, a Tesla spaceship. Who knows with him?
Uh-huh. All right. So Tesla, we got to watch them.
Yeah.
What about Microsoft? What's the story there?
Well, they've been quietly building this cloud computing empire with Azure,
Azure, right?
and it's become a major, major source of profit for them. So we'll be watching how much Azure is growing.
Yeah, are they catching up to Amazon?
Exactly. Amazon Web Services, they're the big dog in cloud computing, so it'll be interesting to see if Microsoft is closing the gap.
Okay, so tech. Got it. What's next?
Let's move on to travel. We've got Boeing and Royal Caribbean reporting this week, both giving us different perspectives on the travel industry.
Okay, interesting combo. Boeing, the airplane giant.
Yeah, they're trying to bounce back from those 737MX issues.
Oh, right. Yeah, they had a rough couple of years.
And then Royal Caribbean, they're trying to, see if people are still willing to spend money on cruises, even with inflation and everything.
Yeah, are people still taking those big vacations?
Exactly. So for Boeing, we want to know if they've finally sorted out their production problems.
Can they actually build planes on time now?
And our airlines, are they confident enough to place big orders for new planes?
Makes sense. So if Boeing isn't getting orders, that's probably bad news for the whole industry.
Right. And for Royal Caribbean, it's all about consumer sentiment. Are people still booking cruises, or are they tightening their belts?
And if they are booking, are they going for the super fancy cruises, or are they being a little more budget conscious?
Those are the questions, yeah. We need to see if the cruise industry is really back on its feet.
Okay, we've got tech, we've got travel. What about energy? I see ExxonMobil and Chevron are on the list.
They are. And they're likely to report big profits, thanks to oil prices being so high.
Oil's been all over the place lately.
And it has. But the real question, beyond the profits, is what's their long-term plan? Are they just riding the oil wave? Or are they, thinking about the future?
You mean, are they investing in renewable energy, like solar and wind and all that?
Exactly. Investors are getting more and more concerned about climate change, and they're looking for companies that are, planning for a future where fossil fuels aren't the only game in town.
So are ExxonMobil and Chevron going to announce any big renewable energy projects, or are they sticking to their old ways?
We'll see. Are they adapting to the changing energy landscape?
Okay, good point. Let's finish our sector preview with one more stop, consumer goods.
Oh, good.
I see Starbucks is reporting this week, which always gives us a good sense of how people are spending their money.
Oh, absolutely. Starbucks is a great one to watch. They're dealing with rising costs, the price of coffee beans, milk, everything.
Everything's more expensive these days.
It is. And at the same time, people are watching their wallets more closely.
Yeah, no one wants to pay $5 for a latte.
Right. So the big question for Starbucks is, can they raise prices without scaring away their customers?
Yeah, can they keep people coming back for their coffee fix, even if it costs a little more?
That's the balancing act. It'll be interesting to see how they handle it.
Okay, so we've laid the groundwork, we've got the big economic reports, and we've got a whole lineup of fascinating earnings reports to dive into.
Yeah, we've got a busy week ahead of us.
But before we go any further, let's give our listeners a quick rundown of those earnings per share estimates we talked about earlier.
Yeah, good idea. It'll be helpful to have those numbers in mind as we go through everything.
All right, so starting with tech, Tesla is expected to report earnings of
$2.83 per share.
$2.83. Okay.
Which is a pretty impressive number, considering the state of the economy and everything. It shows just how strong the demand for electric vehicles really is.
Okay, and what about Microsoft?
Analysts are expecting $2.61 per share for them.
All right, $2.61.
Which would be a slight increase from last quarter, so pretty good considering the economic slowdown we were just talking about.
Yeah, not bad.
It really shows how Microsoft is, adapting and finding ways to grow.
Okay, makes sense. Moving on to travel, Boeing is anticipated to report
$1.40 per share.
$1.40, okay.
Which would be a big jump from last year.
Yeah.
When they were still struggling with the 737 MAX issues.
Right. But as we said, we got to look beyond the numbers, see if this recovery is for real.
Exactly.
And Royal Caribbean, what are we thinking there?
Analysts are predicting $1.16 per share for them.
$1.16. Okay, so it sounds like the cruise industry is recovering.
Yeah, it seems like it, but we need to see how inflation is impacting their bookings and everything.
Right. All right, let's move on to energy. ExxonMobil is expected to report earnings of
$3.25 per share.
Wow, $3.25. That's a lot.
It is. Those high oil prices are really boosting their profits.
Yeah.
But remember, the question is whether they're using those profits to invest in the future.
In a more sustainable future, yeah.
Exactly. Are they thinking long-term?
Okay, and what about Chevron? What are we thinking there?
Analysts are predicting $3.10 per share for them.
$3.10. Okay, so similar story to ExxonMobil.
Very similar. Big profits, but the question is, are they just enjoying the ride, or are they preparing for a future where oil isn't king?
Okay, last but not least, Starbucks.
The coffee giant.
They're expected to report earnings of
$1.90 per share.
$1.90. Okay, not bad considering all the challenges they're facing.
Yeah, they're managing to hold their own, but it'll be interesting to see if they can keep it up.
Okay, so those are the earnings per share estimates for some of the key companies we'll be discussing this week. Remember, these are just forecasts. The actual results could be different.
Yeah, and sometimes the surprises are the most telling, right?
Right, so we need to pay close attention to those, too.
Exactly. And of course, we can't forget about those big economic data releases.
Yeah, we'll be diving into those next.
Those could have a huge impact on the markets.
Okay, I'm feeling a lot more prepared to handle this week's news now.
Good, good. That's what we're here for.
So buckle up, everyone. It's going to be a wild ride.
Hang on tight.
All right, let's do it. All right, we've talked about the big picture, the economy. Now let's get down to brass tacks, those earnings reports.
Yeah, time to see if those companies can walk the walk.
You know, put those estimates to the test.
Exactly. See what's really going on.
I'm ready. Where should we start?
Well, let's stick with tech, shall we? Microsoft's up first, Wednesday afternoon.
Oh, yeah, big one.
Their expected earnings, remember, $2.61 per share.
$2.61.
Yeah. But, those numbers, they don't always tell the whole story.
Right, we got to dig a little deeper.
Exactly. We need to figure out what's really driving those earnings.
Okay, so what should we be looking for with Microsoft?
Well, for Microsoft, it's all about the cloud.
Oh, you mean Azure?
Azure, yeah, exactly. They've been pouring money into Azure, trying to catch up to Amazon Web Services.
Yeah, Amazon's the big player in the cloud, right?
They are, but Microsoft's coming for them.
So we need to see if Azure is growing, right?
Yeah, absolutely. If Azure is growing, it means Microsoft's cloud strategy is working.
But if it's not?
If Azure growth is slowing down, that could be a warning sign.
Okay, so Azure, that's one to watch.
Yeah, definitely.
What about their AI stuff? I feel like every tech company's talking about AI these days.
Oh, they are. But Microsoft's actually doing it.
They're putting their money where their mouth is.
Exactly. They're putting AI into everything. Office, Windows.
Are they making money from it, though?
Well, that's the question, isn't it?
Yeah.
It's still early days for AI, but it's definitely a potential growth area for them.
Okay, so AI, something to keep an eye on.
For sure.
All right, we've talked Microsoft. Now how about...
A little more excitement.
Oh, I know who you're talking about. You're talking about Tesla.
You got it. Reporting on Wednesday as well.
Same day as Microsoft.
Head-to-head expected earnings, $2.83 per share.
$2.83.
But with Tesla, honestly, who even cares about the numbers?
That's kind of true. It's all about Elon Musk, right?
He's the show.
What's he going to announce this time? A Tesla rocket ship?
You never know with him. But seriously, there are some real questions facing Tesla.
Like what?
Well, can they keep up with demand? Everyone wants an electric car these days. Can they build them fast enough?
And the competition, right?
Oh, the competition's fierce. You've got Ford, GM, all the traditional car companies, plus the new guys, Rivian, Lucid. They're all gunning for Tesla.
So Tesla's got to stay ahead of the curve.
You got to keep innovating, that's for sure.
Okay, Tesla, always a wild card.
Absolutely.
We've covered the tech giants. Let's move on to travel. What about Boeing? They're supposed to report $1.40 per share, right?
Yeah, $1.40, a decent comeback from last year.
They had a rough year with the 737 MAX, yeah.
But are they really back on track?
That's the question, isn't it? Have they fixed their problems?
No, they've been working hard trying to rebuild trust with airlines and regulators.
They're going to take time, though.
It will. And even if they've sorted out their production issues, they still need to prove that they can deliver planes on time, on budget.
The airline industry, they're not messing around.
No margin for error.
Okay, so we got to see if Boeing's actually got their act together.
Exactly. And we need to look at demand. Are airlines placing orders?
Yeah, are they buying new planes?
If they're not, that could be a bad sign for Boeing.
Makes sense. So Boeing, lots to watch there.
Oh, yeah.
What about Royal Caribbean? Are people still cruising?
Well, their expected earnings, $1.16 per share.
$1.16, okay.
Suggest that the cruise industry is, it's still afloat.
Afloat. Good one.
But we got to look closer, look at their bookings.
Are people actually booking cruises?
Exactly. Are they seeing strong demand or are people canceling?
And what kind of cruises are people booking? The fancy ones or the more basic ones?
Right, that's important too.
And prices, what about prices? Are they having to offer discounts to fill those ships?
Good point. That's always a sign of how things are really going.
Okay, Royal Caribbean, another one to watch.
Yeah, for sure.
We've done tech, travel, now let's talk energy. ExxonMobil and Chevron, they're both reporting this week.
Big oil. Yeah.
And they're both expected to make a lot of money.
Oh, yeah. Huge profits.
ExxonMobil, $3.25 per share. Chevron, $3.10.
Those high oil prices are really working in their favor.
But the question is, what are they doing with all that money?
Exactly. That's what we need to find out. Are they investing in renewable energy?
Like solar, wind, that kind of stuff.
Right. Are they thinking about the future?
Because if they're not...
Investors are going to start getting worried.
Yeah, no one wants to be left behind when the world shifts to clean energy.
Exactly. So we need to see some concrete evidence that ExxonMobil and Chevron are taking this seriously.
Okay, so big profits for energy companies, but big questions too.
For sure.
All right, let's wrap up our earnings preview with Starbucks. Expected earnings, $1.90 per share.
Not bad, considering
Yeah, not bad at all.
they're facing some headwinds, rising costs, changing consumer tastes.
Yeah, it's a tough environment for a coffee company.
It is, but they're managing. We need to see if they can keep it up.
So what should we be watching for with Starbucks?
Well, how are they doing globally? Are they still growing in China? And how are they dealing with those rising costs we talked about?
And what about new products?
Yeah, are they coming up with anything new and exciting to, keep people coming back for more?
Okay, so Starbucks, lots to pay attention to.
Absolutely.
All right, we've covered a lot of ground here. Tech, travel, energy, consumer goods. We've talked about the trends to watch, and we've gone over those earnings per share estimates.
It's a lot to take in.
But don't forget, we've got those big economic reports coming out, too.
Oh, yeah, those are going to be huge.
We'll be diving into those next.
Stay tuned for that. It's going to be interesting.
All right, everyone, buckle up. It's going to be a wild week. Come on, tight. Okay, we spent a lot of time talking about those earnings reports, but
Yeah, there's more to the story.
there's always more to the story, right? We got to look at the bigger picture.
Got to zoom out.
Yeah, zoom out. See what the overall economy is doing.
Exactly. Because sometimes
what?
Sometimes those economic reports, they can be even more important than any individual company's earnings.
Oh, yeah, definitely. They can really set the tone for the whole market.
It's like, individual earnings reports are like looking through a microscope.
Oh, okay.
But these big economic reports, they're like looking through a telescope.
I like that, a telescope, yeah. Gives you that wider view.
Exactly. So let's start with the big one this week, the Federal Reserve interest rate decision coming up on Wednesday.
Wednesday, the Fed, everyone's waiting to see what they'll do.
Yeah, everyone's on the edge of their seats wondering if the Fed's going to raise rates again.
Will they, won't they?
The suspense is killing me. Remember, they're already at 4.25% to 4.50%.
Which is pretty high, historically speaking.
Yeah, highest we've seen in a while. And those rate hikes, they've definitely been a factor in all the market volatility we've seen.
Oh, yeah, for sure. When rates go up.
Borrowing gets more expensive. For companies, for consumers.
Yeah, we're all feeling it.
Mortgages, car loans, everything.
Yep.
So what are people saying? What are the experts predicting for this Fed meeting? What do they think?
Well, most people seem to think the Fed's going to hold off this time, keep rates where they are.
Pause for a minute.
Yeah, pause. They've been hinting that they want to see how those previous rate hikes are affecting the economy.
So they're being cautious, huh?
Yeah, taking a breather, but they're still watching everything very closely, especially inflation.
If inflation starts going up again.
Oh, they'll be right back to raising rates.
Got it. So Wednesday, Fed decision, big day.
Big day, for sure.
What's next on our economic calendar?
Well, on Thursday, we've got the Gross Domestic Product Report, the GDP.
Gee, that's a big one.
Yeah, this tells us how much the U.S. economy actually grew in the last quarter of 2024.
So is it growing? Is the economy doing well?
Well, the forecast is for 2.8% growth.
2.8%. Okay.
Which, on the surface, doesn't sound bad.
Sounds decent.
But it's actually a slowdown from the previous quarter.
A slowdown. So is that a sign of trouble? Well, it depends. We need to figure out what's causing the slowdown. Is it just a temporary thing?
Could be.
Or is it, something more worrisome?
So we got to look deeper.
Exactly. See what's really going on underneath those numbers.
Okay, and then last but not least, we have the Personal Consumption Expenditures Index, the PCE, coming out on Friday.
Friday, the PCE, the Fed's favorite inflation gauge.
Their favorite.
They love it because it's more nuanced than other inflation measures. It takes into account how people are changing their spending habits.
Oh, yeah, like if something gets too expensive.
Exactly. People might switch to a cheaper alternative.
Makes sense. So the PCE captures all of that.
It does, and that's why the Fed thinks it's a better measure of actual inflation.
So if the PCE shows that inflation's still a problem,
The Fed might get nervous, yeah.
even if they decide to pause rate hikes this week,
Exactly. But if inflation's cooling down,
then maybe they'll relax a little.
yeah, maybe they'll hold off on raising rates for a while longer.
Okay, so those are the big three this week. Fed decision, GDP report, and the PCE.
Yeah, those are the ones to watch.
Are there any other, smaller economic indicators we should keep an eye on?
Well, there are a couple. One is the Employment Cost Index, which basically tells us how much wages are going up.
So if wages are rising quickly...
Could be a sign that inflation's heating up.
Ah, I see. Makes sense.
And then we'll also want to keep an eye on, what's happening in China.
China, okay.
Their economy, it's huge. And if they start having problems...
It could affect the whole world.
Exactly. It's all connected.
Right. Everything's global these days.
It is, so you got to keep an eye on what's happening everywhere.
Okay, I think we've covered a lot of ground this week.
We have. We've talked earnings, we've talked economic indicators.
We've gone over the key companies, the trends to watch, all the things that could move the markets.
It's a lot, but remember, knowledge is power.
That's right. The more you know, the better decisions you can make.
Exactly. And don't be afraid to ask questions. Do your own research. Keep learning.
Yeah, the market's always changing. Got to stay ahead of the curve.
Couldn't have said it better myself. So, keep your eyes peeled, stay curious, and we'll be back next week with another deep dive into the world of market movers.
Until then, happy investing, everyone.